Hello everyone, welcome to this Q&A session on module 7, that is reconciliation, ITC matching and books. So in this module we studied about the matching of GSTR 1, GSTR 3B and GSTR 2B returns. Along with this we also learned about reconciliation of GST returns with sales register and purchase register. So now let us take up few questions and try to learn about the topic in detail. So to begin with, question number 1, what is the fundamental purpose of reconciling GSTR 1 and GSTR 3B before filing? Describe the key tables in each return that are primarily involved in this reconciliation. So it is very important to reconcile GSTR 1 and GSTR 3B regularly so that notices and penalty notices or interest can be avoided. So the fundamental purpose of reconciling GSTR 1 and GSTR 3B is to ensure that the outward supply, that is the sales data reported in detailed GSTR 1 summary, matches the summary outward supplies details and the tax paid in GSTR 3B return. This prevents discrepancies that could lead to notices, penalties or issue of recipients claiming input tax credit. Key tables involved include the outward taxable supplies in GSTR 1, example table 4 for B2B supplies, table 5 for B2C supplies, and the consolidated outward supplies figure in GSTR 3B. So the various tables like B2B must be reconciled with GSTR 3B to ascertain that the turnover as declared in GSTR 1 matches with GSTR 3B return. The turnover in the form of B2B supplies, that is business to business supplies, made to registered person, then B2C, that is supply made to unregistered person, and B2C large invoices where interstate supply has been made and the value exceeds rupees 1 lakh. Also, the nil rated exempt supplies are also to be reconciled from the GSTR 1 return. These are the sales data that gets auto populated in GSTR 3B return. So proper reconciliation is a must. Then one more important thing to note here is that while reconciling the GSTR 1 data with GSTR 3B data, the HSN summary as reported in GSTR 1, the total of HSN summary must match with the total of the outward taxable supplies as reported in GSTR 1 return. So moving ahead, next question, a taxpayer discovers that the total taxable value reported in GSTR 1 is higher than the taxable value declared in GSTR 3B for the same period. What are the potential reasons for this mismatch and what immediate action is required? So a higher taxable value in GSTR 1 than GSTR 3B could indicate underreporting of sales or miscalculation of tax in GSTR 3B return. The potential reason includes omission of certain values in GSTR 3B, then incorrect classification of supplies, that is zero rated as taxable in GSTR 1 but omitted in GSTR 3B, then clerical errors or typographical mistakes. Immediate action involve receiving an intimation from form DRC 01B under Rule 88C requiring the taxpayer to either pay the differential tax amount along with interest or provide an explanation within 7 days. So any such mismatch, if discovered by the SSC himself, he must voluntarily discharge the shortfall of liability as disclosed in the previous return along with interest. What are the consequences if the input tax credit claimed in GSTR 3B significantly exceeds the ITC available as per GSTR 2B? So previously a variation of 10% or 20%, and finally 5% was allowed to be taken. So if in GSTR 2B certain invoices were not reflecting, but the SSC claims the input tax credit of such invoices which are not appearing in 2B, and the difference does not exceed 20% or 10% on a later date or 5%, then in such case notices were not issued to the taxpayer. But with effect from, I guess, July 2022, only those input credits can be taken which reflects in GSTR 2B. Any excessive input taken would lead to issuance of notice by the department. So if ITC claimed in GSTR 3B significantly exceeds the ITC available in GSTR 2B, the GST department might initiate investigations, issue notices, and potentially demand the reversal of excess input tax credit claimed along with interest, that is 18% per annum, and penalties, which is 100% of the wrongly availed input tax credit. So a regular reconciliation is essential to prevent such situation. Next, a business finds a mismatch between the tax amount calculated in the sales register and the tax reported for the corresponding invoice in GSTR 1 due to a rounding difference. How should this discrepancy be handled? So, minor rounding differences between the sales register and GSTR 1 tax amounts are common. Many reconciliation tools allow setting a threshold, that is plus minus ₹1, to treat such document as almost match. If the difference is within the acceptable rounding limits, the taxpayer might choose to accept it, or if using software like Tally Prime or other software, configure the system to ignore such differences for reconciliation process. If the difference is significant, it indicates an error in calculation or data entry that needs investigation and correction, potentially through an amendment in GSTR 1. So it is always advisable to ignore the rounding off in case of GST amounts. Although the final bill amount can be rounded off, but it is always advisable to not round off the GST amount, as the JSON file generated from the software or the offline utility in which there is a rounding off effect, it will ultimately affect the total taxes payable at the prescribed rate when multiplied with the turnover. So there will be a mismatch. Next, describe the key steps involved in reconciliation of a business's purchase register with GSTR 2B. What action should be taken for invoices that appear in the purchase register but not in GSTR 2B? So reconciling the purchase register with GSTR 2B involves comparing inward supply data recorded in accounting records with the input tax credit data reflected in GSTR 2B. Key steps includes downloading GSTR 2B, importing the purchase register, using a matching tool, either manual or automated, to identify the discrepancies, and taking action on mismatched or missing documents. For invoices in the purchase register but missing from GSTR 2B, the business should communicate with the supplier requesting them to upload the invoices in their GSTR 1 promptly. Until the invoices appear in GSTR 2B, ITC cannot be claimed after January 1, 2022. So, in order to reconcile the purchase data with GSTR 2B, the first step is to download the GSTR 2B. So, GSTR 2B can be downloaded either in JSON format or in Excel format. Once GSTR 2B has been downloaded, the purchase register should be exported in Excel format. Then the purchase register should be converted into the format as per the offline utility or a third-party software which is used for the reconciliation process, and imported in that software. After importing the purchase register and GSTR 2B into that software, a reconciliation is prepared by the system automatically. Once the differences are observed, action is required to be taken on such differences. If the taxpayer is not using any third-party software or any utility, then Excel is sufficient to reconcile the data by using formulas like VLOOKUP and HLOOKUP. Next, if the differences have been identified, like some invoices are appearing in our accounting records but are not appearing in GSTR 2B, then first we should identify if those invoices contains GST. If such invoices contains GST, then the supplier of those goods and services should be intimated about the missing invoices, and they can be requested to upload the invoices in the subsequent month's return. Next, if some invoices are identified which are appearing in GSTR 2B but not in our accounting records, then first the taxpayer must trace out if those invoices pertain to our business or not. If they pertain to our business, then the accounting entries should be taken. If they do not pertain to us and inputs have already been claimed against such invoices, then a reversal should be made in the subsequent periods 3B with interest. If those invoices have been identified during the current month only, then it must be reversed in the current month's GSTR 3B return. No interest is required to be paid at the time of reversal. So this is the process of reconciling the purchase register with GSTR 2B. Next, how does the invoice management system, that is IMS, on the GST portal impact the reconciliation of GSTR 2B and GSTR 3B, especially regarding actions like accepting or rejecting invoices? The IMS allows taxpayers to view invoices uploaded by their suppliers in near real-time basis. Actions like accepting, rejecting or marking invoices as pending directly impacts GSTR 2B and indirectly affects the GSTR 3B. If invoices are rejected or marked as pending before the 14th of the month, they are excluded from the draft GSTR 2B, potentially preventing the ineligible ITC claims. Post January 14th, GSTR 2B is considered as a draft and recomputation might be needed if actions are taken requiring the taxpayers to plan the input tax credit claims accordingly. So the recipient's action like accept, the invoice is deemed correct and associated ITC is eligible for claiming. If he rejects, the invoice contains errors or inaccuracies and the recipient disputes it. Rejected invoices are not considered for ITC claims and the supplier is notified to make corrections in GSTR 1 return. Then pending, the recipient needs further verification or clarifications before taking any action. Pending invoices are carried forward to the subsequent period within IMS until a final action is taken on those invoices. So these are the options available with the recipient to either accept, reject or mark the invoices as pending. What is the significance of the system generated GSTR 3B, that is in PDF format, available on the GST portal? How does it help the taxpayers in their reconciliation process? So once GSTR 1 return has been filed and the cutoff date of GSTR 2B is lapsed, a system generated GSTR 3B is available on the GST portal. This system generated GSTR 3B can be downloaded and matched with the data as filed in the GSTR 1 return. So the system generated GSTR 3B PDF provides a crucial snapshot of the auto-populated data based on the filed GSTR 1 or IFF and the GSTR 2B for the corresponding tax period. It helps the taxpayers to verify the accuracy of auto-populated figures derived from their own GSTR 1 return and their suppliers' GSTR 1s that are reflected in GSTR 2B return. Then it helps to identify the potential mismatches between the system calculation and their accounting records before they proceed to file the GSTR 3B. Also, it helps to understand the basis for the tax liability and the input tax credit figures. So, although the GSTR 3B is auto-populated from the GSTR 1 return, it should not be filed blindly. It must be verified with the system generated GSTR 3B and the GSTR 1 return that has been filed by the supplier. Only then it should be proceeded to file the final GSTR 3B return. Next, a business reports an invoice in GSTR 1 for October, but due to a procedural delay, includes the tax liability for this invoice in the GSTR 3B for November month. How does this timing difference impacts reconciliation, and what is the ideal approach to prevent it? So, there will be a mismatch in GSTR 1 and GSTR 3B for both October and November month. In the month of October, the turnover declared in GSTR 1 will be higher, whereas the corresponding tax liability in GSTR 3B for the month of October will be lower as compared to GSTR 1. Similarly, the outward supplies declared in GSTR 1 for the month of November will be lower as compared to the turnover in GSTR 3B, and its taxes to be paid will be higher in GSTR 3B for the month of November. So this timing difference will cause a mismatch in GSTR 1 versus GSTR 3B reconciliation for both October and November. October's GSTR 1 will show a liability that doesn't match with the GSTR 3B for that month, while November's GSTR 3B will show a payment for an invoice already reported in previous GSTR 1 return. The ideal approach is to ensure that sales are reported and tax liability is accounted for in GSTR 3B for the same period as the GSTR 1 filing. This requires strict adherence to the internal timelines for invoice booking and return preparation. So now in the present scenario, this will not be possible as the GSTR 1 data is auto-populated in GSTR 3B return, and there are minimal chances of any mismatches. Next, describe the importance of GSTR 3B versus GSTR 2B reconciliation for a taxpayer, focusing on the potential implications if this reconciliation is not performed diligently. So, reconciling GSTR 3B with GSTR 2B is crucial for maximizing input tax credits, claims, and ensuring compliance. GSTR 2B is the primary document used to determine the eligible input tax credit, and any mismatch with the input tax credit claimed in GSTR 3B can have significant implications. If not performed diligently, it can lead to blocked or denial of input tax credit. Excess input tax credit claimed beyond GSTR 2B may be reversed or disallowed by the department, resulting in financial losses. Notices and penalties. Significant mismatches can trigger notices like DRC 01 under Rule 88D, demanding explanations or payment of excess ITC claim with interest at the rate of 24% per annum and penalties at the rate of 100% of the wrongly availed input tax credits. Then incorrect GSTR 9 filing also is the consequence of any mismatch in ITC claimed. So inaccurate ITC reconciliation will flow into the annual return GSTR 9, leading to further discrepancies. So overall, it is impertinent to understand the importance of reconciliation of GSTR 3B and GSTR 2B on a regular basis. Any discrepancies may lead to notices and communications from the GST departments. Also, it may lead to GST audits and investigations. The department may block the credit or deny the credit and may charge for the excess input tax credit availed along with interest at the rate of 24%. So next, what specific details should a taxpayer meticulously verify in the purchase register when reconciling it with the GSTR 2B to ensure maximum and accurate input tax credit claims. When reconciling the purchase register with GSTR 2B, the taxpayer should meticulously verify the GSTIN, the supplier GSTIN matches in the purchase register and GSTR 2B. Then the invoice details, the invoice numbers, date and taxable value should match exactly. In case of any audits of department, if the invoice details are not same, the input tax credit can be denied. Tax amounts, the CGST, SGST and IGST along with any cess must match. Then the document type, ensure it's correctly identified, invoices or debit notes or credit notes. Then input tax credit eligibility, confirm that the input tax credit to a business purpose and is not blocked under section 17(5), which considers the block credits. Then reverse charge applicability, ensure the invoices attracting RCM are correctly identified and processed. So any reverse charge liability must be discharged by the supplier of goods or services. Then the HSN codes and SAC codes. Verify the correctness of HSN or SAC codes reported by the supplier. So the bills or the invoices that the taxpayer has in possession and the HSN mentioned in the invoices must match with the HSN as reported by the supplier of the goods or services. So that's it for this module. We have completed module 7 and now we will proceed to module 8. So thank you.